Welcome back to the Rebel's Edge, where we've got a stock that is back from the dead, and the reason might be Roaring Kitty. We've got the 411 on that and a lot more on the Rebel's Edge. Bang! Bang.
All right. Look at this. Look at this. I don't even know what time of day it is wherever in the hell you are, but you're somewhere in an undisclosed place.
It's between 5 and 6, Pete, and it's Kinsale, Ireland.
Hi. Oh, Ireland, you say.
We went to the donkey sanctuary over here in Ireland, where they rescue donkeys. And I had a few of our former friends that I was going to rename for some of those donkeys, because you can adopt these donkeys for next to nothing and name them.
Well, we got a lot of donkeys on TV telling us about the economics of what's going on, so why not?
That's exactly what I thought. Well, welcome back, folks. It was a great weekend. I flew out Friday over here to Ireland, and I'll be coming back in a day or so. But he is Pete Najarian. I'm Jon Najarian, and we always bring you the Rebel's Edge Monday, Tuesday, Wednesday, and Thursday, unless one of those happens to be a holiday, or unless we happen to be filming with our buddy Grant Cardone, which might put a little problem on Thursday's show, Pete. We might have to put up something special on Thursday that might not be the Rebel's Edge. But anyway, let's get started, shall we, Pete?
Yep, let's do it.
Macro minute. I'm going to say China and consumer prices rising more than expected in April. Well, that's a sign that the little bit of stimulus they've given their market is doing what stimulus usually does, and that's pushing up prices. We've got a reading coming out here, Pete, on Wednesday this week that might kind of pave the road for continued flat or up in interest rates. I don't really think so. I don't think up is in the cards right now, but we've got that coming our way Wednesday here in the United States.
And that's exactly what I'm focused on for the macro minute, John. It's the CPI report of April. We all want to know. We all want to see it. Where are we? Well, how's that going to affect the Fed? Are they going to cut? Are they going to stay? Are they going to raise it? I don't think they're raising it either. I'm with you. But as of right now, John, if you believe everything about the CME tool, which most of it has been about as correct as anybody out there, I would say, that might be the best opportunity for a rate cut in the time frame of September. So we'll see if that happens. There's a lot of room between now and then and everything else. But obviously, anytime we're going to get this kind of economic data or inflation data, it's very, very important, and it's what the Fed looks at. That's why we look at it.
You bet. And what we also look at, folks, is everyday fantastic futures.
Fantastic futures.
Fantastic futures, Pete. I've got two of them, really. One of them is your longtime one, which is cocoa, which is seeing nearly a 19% drop today. That is one of the biggest drops I've seen out of cocoa, Pete.
Yeah.
But ever since it topped out at whatever, 11,000 and something, was 11,000 or 1,100? I forget. But it was significantly to the upside. Yeah, it was 11,400 or something. Well, now it's 7,200. So you can get an idea how much it's come down. That's a massive drop, that 20% drop there. And then just for good measure, Pete, I'll say, by the way, wheat is going up a lot, and that goes into an awful lot of foodstuffs in the U.S.
Right. I totally agree with you, John. I mean, that is an amazing move from cocoa, and maybe something has triggered. Maybe it's just the fact that it just went up way too fast. And we've seen that out of a lot of things, including where I'm going, which is Bitcoin. Bitcoin made that incredible move to the upside, and then it just started to drop. May 1st, it nearly bottomed, or maybe it did bottom because it got all the way down to 58,000. Well, we are today trading a heck of a lot closer to 63,000, John. So 5,000 higher, and I'm talking about the whole month so far of May. But nonetheless, this is a pretty substantial move, and it's just been kind of stair-stepping a little bit and a little bit more and a little bit more. We'll see. I'm not saying it's going all the way back up to the highs that it's been, but it certainly has bounced off of that. And that all started on May 1st. Literally, it hit down there under 60,000, 58, and now here we are at 63,000.
Yep. You don't want to overstay your opportunity by saying, I think I'll hold off for another $1,000 in Bitcoin. It's a $58,000 number when it was trading there. I think you pull the trigger rather than holding on for 57 or whatever. Anyway, now we've got a big one, Pete, GameStop, because the stock was up over 110%, traded through $38, folks. And then it backed off by $10, but it's still up 60% on the day. And when you look into it, was it earnings? Was it a buyback? No, it's Roaring Kitty, and Roaring Kitty's back. And all he had to do basically, Pete, was lean into the stock, because literally that's the meme he put out. He leaned in and he just put a picture of himself leaning in on Twitter, and boom, everybody knew what he meant and they all came for it. And I'll point out, Pete, before I hand it back to you, that we saw unusual activity throughout the entire month. I mean, we've seen it going back to April, Pete. They were buying the May 12 calls. Well, they expire this Friday. So that's still pretty good. What did they pay for those? 20 cents. 20 cents. What did those go to today? Oh, let's see. They went to $26.20. They even had some options just 2 weeks ago, Pete. June 11 calls that were $1.43. The stock was under $11. And you can imagine those also did pretty well. We have a bunch of them. We'll post them up so you guys can see it.
Well, and the amazing part, John, is this. So we all know this name. We all got to go back to 2021, but we all know this name. We know about Roaring Kitty and how influential, I'll say, he is on the markets and in the world of this whole meme stock idea, right? I mean, absolutely incredible. Here's the other incredible part, John. The short interest is still extremely high. You're still looking at 21, 27%, somewhere in that, broad. I know that's wide, but something north of 20%. How about that? It's a pretty incredible number. So if it starts to move and you've got a little momentum and you've got Roaring Kitty out there leaning in, all of this starts to play into this whole thing. So it's amazing. You look at the cash to debt, though, of GameStop, it really isn't that bad. This is one of those names that's a little bit different than some of the others that we bring up where they're really in debt and they've got this and that. They actually have $600 million to the positive side, John. And then the cash burn, that is pretty high. That's about $215 million. So when you look at all of that, it doesn't make really a whole lot of sense that this stock needs to go to the direction it has at the speed that it has. That doesn't necessarily matter. When Roaring Kitty comes back to life like he has, this is exactly what you'd almost expect to have happen, right? And, it's right out of the movie, John. It is literally right out of the movie. He shows up and there she goes.
Yep. Well, there she goes, Pete. And when you've got as many hits as we have, basically all between $10.50 and $11.
Yeah.
And now the stock, like I said today, traded to $38. Mm-hmm. And by the way, I think the turnover, Pete, now is topping 100 million shares. Yeah, that's a real number. The float, like Pete said, huge short interest. And Roaring Kitty is now the hero again. And everybody's going to be looking at all the other meme stocks like AMC and so forth. So keep your eye on those. And if you're short them, God help you.
Buy some calls.
Yeah, buy some calls to cap off your risk at least. Pete, let's talk about AutoZone, because obviously we spent a lot of time talking about Roaring Kitty and this one. This isn't a meme stock, but what it is we had Evercore basically come out and say some things about AZO, and they added it to their, quote, negative list. So this is one that you would have wanted to be short coming in. And basically, they upgraded some stocks, put other stocks on the negative list, the naughty list, and those stocks, AutoZone included, are going down.
Mm. Well, getting hit like that, John, what's interesting, though, is from a fundamental standpoint, when you do look at AutoZone, yes, they've got debt, but that's part of what their business model just entails. They have great free cash flow, call it $1.4 billion, not so bad. They've got incredible earnings growth over time. I thought that was pretty impressive. I look at where they are right now, trading on a PE level of about 17. Not too many big name companies out there that are down there underneath 20. Yes, there are some, but not a whole heck of a lot. I tell you what, John, it's been up as high as 25% this year to date. That's how strong it's been. Right now, it's up about 14%. I don't know, man. I kind of push back against this whole thing. I actually look at this and think, you know what? Maybe this is an opportunity coming back from being up 25%, being up now 14%. Maybe that's kind of created a little something. So I think over the next couple of months, I'd be keeping a very close eye on this one. I think when you look at their earnings, you look at the growth, very consistent, about 8%. I think it looks better than apparently Evercore seems to think.
Yeah, I am right in that same view with you, Pete. I like AutoZone for a lot of what they do. I like Riley Auto Parts also for what they do. And I don't think that they're extremely extended in any way. So,
right.
Yeah, maybe on a dip like this, the people should take at least a good hard look at it.
Mm-hmm.
All right, let's take a look, Pete, at Incyte, ICNY. I put the wrong one up there, so it's not your fault, Jarrett, but I put ICY. It's INCY is the stock. And this one's up about 8%, Pete. It's 4 million share turnover, and its normal turnover is only about 2. They added a couple billion to their share buyback, Pete. So that's why this one's seeing the love that they're seeing. $2 billion in a buyback. Yeah, that'll make a difference for almost anybody, but in particular for a company like this that's only a $12 billion company, talking about a sixth of the shares if they could buy them back at this level.
And, you look at the fundamentals of this company, John, we talk about biotech companies all the time, and oftentimes you've got your back against the wall, right? You're sitting there going, oh, man, you know what? We've got to get something out there. We've got to get, the pipeline's got to get a little bit better, and we've got to get a little deeper. We got to get to phase 3, all those kind of things. I don't know. I'm looking at this one as a biopharm. I'm sitting there looking at going, okay, they're going to do a $2 billion share repurchase. That's pretty impressive. Their revenue is up significantly. Their profit margin has gone from 2% to 19%. They've got a really deep pipeline that has gotten, further along than so many other companies. They're focused on dermatology as well as oncology. I think this thing's pretty interesting, John. I like what we're seeing here. I mean, it's not one of those names, we've all heard of Moderna. We've all heard of all of these various names out there, Amgen, whatever, take your pick. But this name doesn't come up nearly as often, and I think that that's probably for the wrong reasons. I think that when I look at the balance sheet and I'm looking at their cash to debt, John, it's almost $4 billion. By the way, the debt level is pretty much zero. I mean, it's like a few million bucks, and we're talking about 3.9 billion right now. So all of that, along with a free cash flow of $1 billion, I would say fundamentally, and when I look at them, they just have the opportunity to be somebody who could really make a move to the upside under the right circumstances. And buying this number of shares back, that's been a great recipe in 2024.
Yep. It's one of the things that Buffett always says, if you've got extra cash, he said, you either pay a dividend or you buy shares back.
Yeah.
And we know he hates giving money to total strangers. So he doesn't like paying dividends.
No.
All right. Pete, let's finish up with Squarespace.
Sure.
So this is a website building tool, really, Squarespace. And a private firm comes in and says, we're going to take them private in an all-cash deal, $6.6 billion deal. It's the company's name is Permira, and they're going to buy them, and shares are up on this buyout, Pete. I didn't have any shares beforehand, but I figured it was a pretty big deal that we should at least discuss people getting in here and buying up some of these companies in a leveraged buyout, LBO, which we haven't seen too many of lately.
Yeah, it's been challenging since they've been a public company, John, but I don't think that means, obviously, you've got a private equity firm who says, you know what, we think we can figure out how to make a lot more money than what these guys have been able to accomplish. So they've been a public company now for about 3 years. 6 million shares, by the way, traded in the first hour of trade today. Its normal total average is 760. So it gives you a little bit of an idea. There's a lot of people out there. There are some small amount of shorts, not much. So I'm not saying there's anything to do with that. Plus the number is $44 billion. Well, or not $44 billion, $44 a share, $6.9 billion. I would say that it's hovering right around 44. There's probably not needed to go any higher than that. Or I don't even think it's going to push back. I think it's going to get done. Probably fourth quarter, they get this thing done. It's probably going to hover around this $44 range for the next 6 months or thereabouts. But interesting to see. And private equity, John, making a big splash so far in 2024. A lot of private equity buying going on, whether it's huge sums or entire companies. It's amazing what's really going on behind the scenes right now.
Yeah, and this one, a major beneficiary, Squarespace, folks.
Mm-hmm.
All right, well, now is the part of the program where we talk about some sports. And I think Pete's back on his football bent, if I got your sports huddle right, Pete. I think you guys were interested in talking about football still, even though, of course, the NFL's getting a little quieter by the day. That's not the only league in town, is it?
No, there's some competition out there. There's the UFL, there's the AFL. If we want to call them competition, we're probably really, really stretching. Stretching. And let's be honest, John, one of the reasons why I think since I played in that last couple of years that I played in the World League of American Football that got bought by the NFL and turned into NFL Europe. But, you know, even back then, they were just getting that Fox contract. That's when money started to go through the roof, right? I mean, that Fox TV contract did it all for them. But that being said, it also created the NFL Network and it created all of the rest of it so that we're actually seeing the NFL. They are not done when it comes January or February for Super Bowl. There is something about the NFL every single day, 365 days a year. And if you think I'm wrong, you're wrong, because that's really what it comes down to. And they can still, from a rating standpoint, John, they can put up the NFL draft and it goes up against the NBA, the NHL, or any other sport, Major League Baseball. It's going to crush them. It's going to absolutely crush them. That's how strong they have become. And that's why I think it's so hard now for the AFL, the UFL, and all these leagues that try to come in there. Unfortunately for arena football, which is the AFL, John, this past week, suddenly the wheels came off. And when I say suddenly, we're only 2 weeks, 3 weeks into this season. And there are teams out there. I've got the Georgia Force, the Iowa Rampage, the Philly Soul, all have suspended operations. Minnesota had a head coach by the name of Ricky Foggy, who's one of my closest friends. He was my quarterback at the University of Minnesota. Phenomenally great guy. He just said, I'm walking away. I'm walking away. Now, there's different reasons why, and I'm not even going to get into that, but do you find it just amazing that a league can only get 2 weeks into the season, maybe 3, I think it's 2, and they're already flushing the toilet, John? I mean, what in the world? I mean, how did they not see this coming? What's the deal there? And I know you've got some numbers about the UFL, so give us a little bit about that as far as ratings and everything else.
Sure. Well, the UFL is not all owned by The Rock, Dwayne "The Rock" Johnson, but he owns a significant piece. And he owned the league that merged to become the UFL because the UFL and another league merged and they decided, okay, well, maybe we have a better chance of surviving like this. The head of Fox Sports, for instance, Pete, owns a significant piece of the league, of the UFL. And just like you said accurately, the survivability is determined a lot on the TV rights and the money you can get from drawing enough eyeballs. And right now they're drawing, scant, but enough eyeballs. They're drawing about 845,000 people a week to watch the first 5 weeks of their season. That's not a bad number. There are a lot of Major League Baseball teams that don't draw numbers like that, quite frankly, unless they're playing Sunday night or something. So they're seeing a big increase in the key advertising demographics, according to what I read, Pete. the 18 to 49-year-olds. And winning does solve almost everything. The two big teams, St. Louis, their opener, Pete, they drew 40,000 people. Now we're 5 weeks in, and I know they're not still drawing that. Right. But the Birmingham, whatever they are, Stallions or something like that, are also doing well. And both teams are 9-1. Mm-hmm. So if you win, people will, tend to gravitate towards it, especially in those two cities. You've got competition in St. Louis, obviously, with the Cardinals, the baseball Cardinals. In Birmingham, not so much. But I would just throw this out there, Pete, that I think a lot of these leagues fail because somebody that tends to have a lot of money, that many of us would say is filthy rich, tries to be a pig and own the whole thing. And I haven't seen that work out yet.
No.
And I think they got to do the model of the NFL. Now, if The Rock and the head of Fox Sports and a few other people own the UFL, that's okay. But sooner rather than later, they got to start selling those franchises to ownership groups that have enough cash to run it. Because that's been, when you said, how do you fail after 2 weeks? Mm-hmm. You fail after 2 weeks if you're the AFL because you never got enough money in the kitty.
Right.
You don't let anybody own a team unless they put up a bond or whatever. In the NFL, you have to put up, what is it, Pete? When you and I were talking with the Raiders, 70% has to be in cash.
Yep.
When you're buying a franchise. Well, so with this, do the same thing. Okay, you want something that if you run it right, maybe you have to put 20 or 30 or 50 mil in. But if you run it right, that could be worth 10x that in a very short period of time. Yeah. Because every NFL franchise right now is in the billions, plural. It's not just one.
Right.
They're all in the billions now. So if you could build a survivable franchise in St. Louis or in Birmingham or in any of those cities, even if the whole league doesn't survive, the NFL will gobble that up. Mm-hmm. And all of a sudden you hit a home run. So if these guys aren't pigs, Pete, they could make it. But if they are pigs, and if The Rock and the guy from Fox want to be the only owners and a couple other minor guys, ain't going to make it.
Right. Yeah. It's tough, man. I mean, the competitive nature of it all, and especially just the NFL and the power that they've got to try to hold you back a little bit. Although they've turned it into a little bit of a, hey, we're the spring league. We're going to stay off of your space and all that kind of stuff. And we'll feed them into you guys or whatever. We'll see how long that lasts. We'll see if that actually does work out. They'll sign some guys from the UFL, I should say, when they get to the NFL. They'll sign some guys for sure. But you know what? It's a matter of how does this whole thing work, and is there going to be a transaction of one or two teams someday? Maybe. Yeah, I mean, it's not completely far-fetched, and it could be an opportunity. How about Major League Baseball, John? We're about a quarter of the way through, so far. And I just wanted to point this out. We've already pointed this out once before, but now that we're getting through a little bit of this season, like I say, we're a quarter of the way through. We've got the Baltimore Orioles, right? Now, if you don't follow it as close as John and I do as far as the money side of things, this is a franchise that has a payroll of $94 million, and they are number one in the AL East. You know who number two is? It's the New York Yankees. Do you know what their payroll is? $303 million. So just make it easy math, 3 times as much money, and they're looking up at Baltimore. Oh, and by the way, you know who number 3 is in the AL East? It's the Boston Red Sox. They got $176 million, John. So they got about, call it 80 million, whatever you want to call it, $80 million more that they're putting in there as far as the payment goes, as far as payroll. Then I just thought it would be fun to say, all right, we've got the Mets. They have the highest payroll of any team, and you and I both know who that is, the owner of that team. $305 million is what their payroll is. You know where they are? They're number 3 in the NL East. These guys aren't even playing 500 baseball. And meanwhile, they're looking up at franchises that are paying far less. They're having more success. And so I guess the question is, how do they do it? Why do they do it? Are they the worst business people ever when it comes to sports? We know in Carolina there might be a slight issue there on the NFL side. So What is the biggest problem, though? I mean, they've got all the money in the world. They can spend all the money in the world. They'll pay the fines that they've got to pay if they have to. But what do you think, John? Like, I look around and I'm like, well, the Twins have a low payroll. They're doing pretty damn good. Baltimore's got a low payroll. They're doing pretty damn good. You've got teams like Tampa Bay where they are always competitive, and they're somewhere near the bottom 5 in terms of what they're paying these guys on the payroll. So what is it that these big guys just miss so much? What's going on? What do you think?
Well, Brad Pitt starred in that movie Moneyball, Pete.
Yeah.
And it is that there's a difference between putting butts in the seats and putting a winning team on the field. And I will say, Pete, that even though the Yankees and the Mets want to win, they need to get butts in the seats. And it's a very competitive place because there are those two teams just across the town. It's not that far from each other. You and I both know that. Citi Field and Yankee Stadium aren't that really far apart. But they're lucky enough to draw from 25 million people in the Metroplex. When I look at the numbers, Pete, and I look at Miami averaging 33,000 people so far this year, more than the Yankees, more than the Mets. Not that much more, but about 2,000 or 3,000 more per game. Still. They are crushing it in terms of the Moneyball stuff, because it doesn't matter about the winning. They're getting the butts in the seats, Pete. Mm-hmm. And, so with a lower payroll, Miami's just got to be printing money. Here's another one. San Diego's number 3. They're doing 31,000 people per game. Again, that's more than the Mets, because the Yankees and Mets are like, 30,800 for the Yankees, and for the Mets, 30,300. So these guys are almost 1,000 people more per game. Now, 1,000 people isn't making that big a difference, but when your payroll is what the San Diego Padres payroll is, or the Miami, whatever the hell they are, Pete. Marlins. Yeah, the Marlins. I can't remember seeing a Marlins game in a decade. It's been that long. I don't see them ever. And yet they're putting people in the stadium. And like to your point, they put them in Tampa, and you and I know the owners because a bunch of former Goldman guys that own the Tampa Bay Rays. And they've won a World Series down there with, one of the lowest payrolls in baseball. So low payroll and a lot of butts in the seats, you're doing pretty well. But if you want to win, you got to play it slightly different. And that's different than just putting butts in the seats.
Yeah, it's amazing how in whatever the sport may be, you look around, you go, look at how much money they put into this 1, 2, or 3 players on that team that it just tears the team apart too, because you got 3 guys, 4 guys making all the money, and the rest of the guys really not making anything close to that. And you got to wonder, sitting around in the locker room, how does that really go well with everybody or not? That's kind of interesting. Well, a lot of fun, John. It's a good kickoff to this early part of the week. And by the way, this past week is one of the best weeks in the market this year. So it just shows you that even though there's a lot of interesting things going on in the stock market, we're still looking at a market that's got a lot of people excited. So you know what? When volatility gets low, it's never a bad idea to maybe look for some protection out there.
Yeah. And Pete, I know you and Mark are going to be on tomorrow, but I'll send you something on Arthur Blank. He is, of course, the owner of the Atlanta Falcons and the co-founder of Home Depot.
Right.
I'm going to send you what he did to turn his franchise around, at least money-wise, Pete. And when you hear it, I think you're going to be shocked. All right. Thanks for joining us, folks. Have a great rest of your week. I'll be back, I guess, Thursday. And 1 p.m. Eastern Time, Pete will be back tomorrow. Make sure you tune in. Bang.